Indian Stock Market for Beginners, a step-by-step guide. How does the stock market work? When it comes to the stock market, there are a lot of things that people do not understand. Many people think that the stock market is a place where people can get rich quick. While it is possible to make a lot of money on the stock market, it is not as easy as some people think. The stock market is a place where people can buy and sell stocks. When you buy a stock, you are buying a piece of ownership in a company. When the company makes money, the stock goes up in value. When the company loses money, the stock goes down in value. What are the different types of stocks? There are different types of stocks, which can be classified into two categories: common stock and preferred stock. Common stock is the most common type of stock, and it gives the shareholder the right to vote on company matters and to receive dividends. Preferred stock typically does not have voting rights, but it does have a higher dividend payout than common stock. There are also different types of preferred stock, which can be classified into three categories: convertible preferred stock, participating preferred stock, and fixed income preferred stock. Convertible preferred stock can be exchanged for common stock at a predetermined price. Participating preferred stock entitles the shareholder to receive dividends that are higher than common stock, and fixed income preferred stock pays a fixed dividend rate. Ultimately, it is important to understand the different types of stocks in order to make informed investment decisions. How do you buy stocks? When you buy stocks, you are buying a small piece of a larger company. You become a part owner of that company, and you can earn money if the company does well. There are two main ways to buy stocks: through a broker or through an online service. If you want to buy stocks through a broker, you will need to find a broker that you trust. Brokers can help you make investment decisions and can also help you track your stocks. They typically charge a commission for their services. If you want to buy stocks through an online service, you will need to create an account with the service. You will then be able to buy and sell stocks online. These services typically have lower fees than brokers. What are the risks and rewards of stock market investing? There are risks and rewards associated with stock market investing. Risks include the potential for loss of principal and volatility. Rewards include potential for capital gains and dividends. By following these tips, you can set yourself up for success when investing in Indian stocks. Tips for beginners in the Indian stock market. In order to make money in the Indian stock market, you need to have a good understanding of how it works. Here are some tips to help beginners get started. 1. Do your research. Like any other investment, you should do your research before investing in stocks. This includes studying the company's financial statements and reading news articles to get a better understanding of the company's business. 2. Start small. Don't invest too much money at once. Start with a small amount and gradually increase your investment as you gain more experience. 3. Use a broker. A broker can help you buy and sell stocks, and can provide advice on which stocks to buy. Brokers typically charge a commission for their services. 4. Stay disciplined. It's important to stay disciplined when investing in stocks. Don't let your emotions get the best of you, and always stick to your investment plan. 5. Diversify. Don't put all your eggs in one basket. Invest in a variety of stocks to help reduce your risk. By following these tips, you'll be on your way to becoming a successful stock investor in India. Thanks for reading. We hope you found this guide helpful and that you are now ready to start trading stocks in India. Good luck and happy investing.